Hi amigos, welcome back to the Evolving Trader, and today's topic is what happens when there are no more bitcoins left in the block. So just imagine no more bitcoins to mine for the miners. But just to get a idea about it, this is the fourth video in the crypto series and Bitcoin series, and I've explained every single thing about Bitcoin halving and how the price reacts to it. So if you didn't watch it, please make sure to watch them first so you'll get a link and sequence to understand all things better. So let's start to it. And the first thing which we'll see, just to get an overview and idea about it, is Bitcoin mining. So Bitcoin mining, basically we know Bitcoin miners are involved in it, and how the Bitcoin's blockchain network is working, and how all the transactions are validated and done, because all the transactions we do in this network are validated by miners to keep the security of the network. So basically, Bitcoin uses a system called proof of work, in which the miner should show that how much effort they have put it to make that transaction successful and valid, and he is rewarded for that in form of Bitcoin. And he should show the energy he had put in and solved the mathematical complex equations. So basically, the term mining is not used in a literal sense, but it is used in all the decentralized things and blockchains. And the Bitcoin miners, as we discussed, get reward to solve all those mathematical problems and equation to confirm the you can say the validity of transaction, that it is genuine and it is valid, and not a hacker is trying to get something out of the network. So that's why involvement of miners is really important to keep the security of the transaction and our money, and to make this network sustain. So going ahead to this, we will see in short what proof of work exactly it. So basically, proof of work is used in all these decentralized mechanism that requires members of network to expend effort solving an arbitrary mathematical puzzle to prevent anybody from gaming the system. Basically, that is prevent anybody from hacking the system. So proof of work is just used widely in cryptocurrency mining for validating the transactions and mining new tokens, as we discussed, nothing new in it. So due to proof of work, Bitcoin and cryptocurrency transactions are processed peer to peer, and they are kept secured and been trusted so far, as we have come so long in cryptocurrency world and all that stuff, not anything important for it. And now comes the topic. Just imagine no more bitcoins in the block that day. Just imagine. But it's not that you can say. We don't know its effect, we'll see it in future. But as the inventor of Bitcoin is not that idiot, he is a smart person, so he's had planned something for the network. So he, according to him or the people in the crypto world, they say that till year 2140, the last of the 21 million bitcoins ever will be mined. Till 2140 is their expectation. We don't know when it will be, we will see it in future. Our part is to invest, trade as an investors and traders in financial markets, and to stay up to it. So basically, till that time, the miners will be rewarded on basis of incentives they get for confirming new transactions and processing them securely and validating them. So basically, if they get 10 rupees as of now, just for example, they will get in future 15 or 20 or more than that, depending on the situation and the things they decide to do. So basically, miners are not at all hampered, and they will have their income, as they have contributed a lot in this network from the beginning. So the beginning contribution is big, so this basically they were involved till, so they will get rewarded in future for sure. And of course, it is expected that the volume of transaction in this network will increase, and it is 100% possible. Because to just give a brief about it, I think Twitter was down as of now. Why it is down? Because there is just a server which is in their company, and it has to be maintained and all that stuff, and it can get down. But you just imagine, if you are contributing in blockchain, your laptop, your computer itself is a server. So just imagine, it would never get down and get anything trouble as of the server. And that's why the blockchain has a lot of importance, and it's not hype. Just get it in your head. It's not hype, it has potential, and a great potential to make revolution out, and it is called web3. That's why. And Facebook owner is not an idiot to change his name from Facebook to Meta. It's a big company, man. He's not an idiot to change it in just a fluke. So it has potential, and you have to get it in your head. We don't know it as a currency, but as the projects which are held in blockchain network, they are highly value adding. Okay, so let's come back to the topic. So of course the miners will be incentivized by the transactions they confirm and validate, so that they will have a high incentives at that time to confirm the transaction, of course, and the amounts of transactions will be more, and they are getting more every single year, as we have seen in the past. So they are always having a high quantity in terms of transactions. So that's it for the video, and I think it is the last video in the crypto series. I will add any if I found something which is really value adding to share, just not to stretch the series. I won't just extend the videos, so that is for sure. So if you found something valuable, please make sure to like this video, share this video, and subscribe to the channel, and hit that bell icon for updates like these. And thank you so much for watching. Bye.